NVIDIA just crushed its third quarter earnings. And yes, I think there is a major opportunity here. So we have to talk about it. Millions of call options are coming in, likely from institutional buyers based on the amounts that we see here. First, we'll briefly talk about its earnings. Don't want to spend too much time on it because you can find that info for yourself and I respect your time. Then we'll dive into the chart and the option chain and I'll tell you exactly what plays I've already taken on NVIDIA and what plays I'm planning on taking right now. And my price target for NVIDIA, just so we get it out of the way, for the immediate term is $165, but I'll tell you how we got to that. And right now, as of the time of this recording, it's trading at $146. So there is some money to be made, a juicy opportunity. Let's dive right into it. All right, so NVIDIA earnings, as we said, absolutely crushed earnings. This is not a surprise. Companies like Microsoft and NVIDIA, they routinely beat out earnings and revenue. 81 cents per share versus 75 expected. 35.08 billion versus 33.16 billion expected, but we know the stock market is forward looking and companies like NVIDIA have to keep growing into their valuation in order for the stock price to keep going. We hear this all the time. NVIDIA is overvalued. No, it is not. And I'll show you why. But back to the earnings real quick. In terms of guidance, NVIDIA said it expects 37.5 billion plus or minus 2% in current quarter sales versus 37.08 billion expected by analysts. So their guidance is slightly above analysts' expectations. But here's the crazy thing. The fourth quarter forecast implies a year-to-year growth of about 70% from a year earlier. Revenue continues to surge at NVIDIA, rising 94% on an annual basis during the quarter that ended October 27th. Now, the most important thing that investors wanted to hear is the update on the Blackwell AI chips. If you recall, just a few days before earnings, there were tons of articles coming out that said the NVIDIA Blackwell chips are overheating. Now, this led to a quick 8% drop in the stock in a week, which when you're talking about a $3.5 trillion company, 8% is a ton. But as I said in our Discord, this is likely an overreaction. Once you've been around the markets for a long time, you see these news headlines and you realize that they are nothing more than a distraction and really an opportunity to pick up shares on the dip. If nothing else fundamentally changed about the company and one headline that really is unfounded, right, and talks about potential issues with Blackwell that are being reported, but nothing from the company itself, it is usually an opportunity for institutional investors to get in. And who knows, they might be creating these headlines themselves. We've all seen that video of Jim Cramer admitting so.
It's really important to defeat Research in Motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the Journal and you get the bozo reporter on Research in Motion and you would feed that there's a Palm's got a killer it's going to give away.
Lo and behold, NVIDIA comes out and says that the cooling issues were resolved months ago and that this is not even an issue. So on the earnings call, Jensen said that the company can't even keep up with the demand for these chips because they are seen as the staple chip when it comes to AI innovation. And before I get into the options plays, I just want to quickly talk about the valuation here, right? There is sort of this, I think because there's such a bad taste in our mouth from the dot-com bubble that anything tech related that seems like it's growing at a crazy pace, at a parabolic pace, right, is seen as, oh, maybe this is another bubble. Here's what the difference is, right? Would you say that the internet is a bubble? Would you say that tech is a bubble? Well, if you asked me back in the year 2000, I would say yes. But if you ask me now, the companies that survived were the companies that continue to grow into their valuations. Yes, you have companies like Webcrawler and Lycos. A lot of you young people don't even know what that is, but those companies weren't making money. Yahoo, for instance, right? But then you had companies like Google and Amazon and Apple and Microsoft that started growing into their valuations. And obviously, technology is part of our everyday lives. So is the internet. So the internet and technology is not a bubble in the sense where this is just hype and all of a sudden this product disappears from our lives. It has become a staple in our life, just like AI will. And NVIDIA is at the forefront of that. NVIDIA is growing into its valuation. It's no joke. The company is printing almost $40 billion a quarter. So no, it is not a bubble in the sense that this product is going to go away. Companies cannot get their hands fast enough on NVIDIA chips in order to fuel their AI research and AI growth. So just a small example, Elon Musk this year said that Tesla was spending $10 billion in combined training and inference AI, largely requiring a ton of chips, right? So then you think about all the chat GPTs and all of the image generators and all of the EVs and all of the supercomputers required to jump into the next frontier of AI, right? All of these companies that have a ton of money to spend, even much more than Tesla, whether it's Google, whether it's Microsoft, whether it's Apple. So we are in the infancy stages. We don't even know what's possible with AI, but we know that the possibilities are infinite. We just can't forecast them. And that is why when you look at NVIDIA compared to its peers, it's laughable. Look at its revenue growth year over year. NVIDIA is 194% compared to 22% for TSM, 32% for Broadcom, 10% for AMD, Texas Instruments at negative 13%, Qualcomm, etc. Right? You look at the 5-year CAGR, 56% for NVIDIA, smoking every single one of its competitors. You look at the EBITDA growth year over year, almost 400%. There isn't anybody of its peers that's even in the stratosphere. AMD comes second at 47%. Now, once you start looking at the forward numbers, right, based on projections, NVIDIA is still killing it and still leading the way. So when I see NVIDIA trading at 55 times earnings, it's not crazy if AMD, which is a company that's far less superior in terms of growth, is trading at 45% earnings, right? Or Texas Instruments is trading at 37% earnings. Or Broadcom is trading at 36% earnings, right? A company like NVIDIA, based on all these growth numbers, trading at a slightly higher PE at 55 is not that crazy. And if you look at their forward PE ratio, right, they're expected to remain around the same. Whereas if you look at AMD's forward PE ratio, it jumps to 105. Broadcom jumps to 155, so on and so forth. So it is not overvalued in the sense that this is just a crap company that doesn't make money. It is growing into its valuation, and it is doing so very nicely, which is why after the earnings, you started seeing all of the major banks increase their price target on NVIDIA. 175 for Wedbush, 175 for Mizuho, 167 for Truist, 160 for Needham. So the way that I got to that 165 number is really just the fact that I think right now it's valued at 3.6 trillion. I do think based on the numbers that we saw by 2025, it is very realistic that it gets to a $4 trillion valuation, and that might be even modest. So a $4 trillion valuation would put its stock price at around 164. So that $4 trillion seems like it's consensus among analysts, and Dan Ives himself said, our view, this is a $4 trillion market cap in 2025 as the godfather of AI drives this spending wave. And remember how I said it's growing into its valuation? In the beginning of this year, NVIDIA was trading at more than 100 times earnings. And because its earnings grew, that PE ratio dwindled back down to about the 55 range. That is the sign of a company growing into its valuation. All right, on to the options plays. So I checked the options chain here, or the options flow. Millions of options here coming in for NVIDIA, mostly bullish. Now, here is the interesting part. Most of these options here coming in are in the money, meaning these are most likely leaps. And you can see the premium. These are all in the millions, right? This is why I think a lot of this is institutional. But most of these expire in 2025, meaning that they are most likely leaps. You can see a lot of these ones coming in at June. So what this tells me is that institutions are giving NVIDIA time to get to that next frontier of 4 trillion. Now, here are my current plays on NVIDIA that I sent out in the trading floor. And if you want access to all of my plays in real time so that there is no lag, make sure that you sign up. I trade live every single morning at market open. It's me. It's not someone that I employ. It is me trading live every single morning at market open. So click the link in the description and come and join us. But NVIDIA, I bought it in the mid 90s on August 5th. That was the last time that I bought NVIDIA. So I hold a ton of shares that we bought in the 90s. Now, you can't go back in time if you didn't buy it in the 90s. So what else did I do? Well, if we look at this here, this is a classic break and retest, right? So we broke out of the all-time high that we established in June. And if you can see here, we actually created a couple of gaps. There's a gap there and there's a gap there. So we broke out, and then after the earnings report, we retested this. And once we retested this level, I ended up buying calls expiring January 17, 2025. All right, I had to re-record this part because I lost all that footage. Doesn't really matter. One other thing that I'm trying to do here is buy leaps for June, at least June 2025. Based on the options flow that I see, based on earnings, based on my reading of the chart and where we are currently in the market cycle, I want to give myself enough time to see a higher target on NVIDIA. Now, those of you familiar with leaps know that we usually go deep in the money to capture a large percentage of the delta, right? We want to mimic the stock's move without having to put up the money to buy the stock. What do I mean by this? Well, I'm thinking about buying the 115 leaps, which have almost an 80 delta on NVIDIA, expiring June 20th, 2025. Currently, it's around $38 or $3,800 per contract. So this is going to cost me $3,800, but will give me an 80 delta, meaning that it's going to move for every dollar that NVIDIA moves. This is going to go up by 80 cents. For every dollar that NVIDIA goes down, it will go down by 80 cents. But it's going to mimic 100 shares of NVIDIA without putting up the capital, because right now NVIDIA is trading at around 142. So 100 shares of NVIDIA would actually cost me $14,200 as of the time of this recording. To buy a leap, which gives me similar control of 100 shares, will only cost me $3,800. So I'm buying the 115 leap for $38, which means that if I hold this until June, I'm going to need NVIDIA to be above 153 bucks by June, if I hold it until June in order to make money. Now, if NVIDIA starts going up between now and June, obviously this leap is going to go up in price and I will be able to sell it for more than the 38 that I bought it for. But at minimum, if I hold it until expiration, it needs to be above $153 in order for me to make money. So how do I lower my cost basis on this leap? Again, if I buy the 115 for 38 and I hold it until expiration, I need NVIDIA's underlying to be above 153. So one other advantage of buying leaps is that I can sell covered calls against that leap, just as if I bought 100 shares. So let's say that I bought that June leap. I can then go out to, let's say, December, and I can sell an out of the money call, let's say the 160 call, for $1.50 or $150. I can even go more aggressive and sell the 155 call for about $240. As long as the call that I'm selling is more than the 153 combined cost of capital for the NVIDIA leap. Why is that? Well, because if I get assigned on those covered calls, then I'm going to have to exercise this leap. And if I exercise this leap and buy 100 shares of NVIDIA at 115, this leap, remember, cost me 38. So my total all in, if I exercise the 115 leap, is 153. So I need the sold call to be above 153. So I buy that leap, and let's say that I sell the 155 for 240, right? So I sell the 155 expiring in December for 240. What does that do to my cost basis? Well, that lowers my 38 cost basis by 240. So if I don't get a sign on this 155 covered call, then all of a sudden my cost basis for this leap is lowered by the credit I just received for this cover call. So it'll be 38 minus 240, which would be 35.60. And then I would, in December, then go out to, say, January and sell another covered call. And if this is my new cost basis for the leap, then I just need that new covered call to be above, was it 35.60 if I remember correctly? That's our new cost basis. So I need that covered call to be above 150.60, right? Since 35.60 is our new cost basis. So let's say that we go out and sell, obviously these prices will be different come December if I'm going to be selling a January covered call, but you get the picture, right? I can sell then the January 153 call or 152 call, as long as it's above this. That way, if I'm assigned, I'm still in profit or at least break even. And I'll keep doing this until I either get assigned or I just continue to keep all of the credit, right, in case we see a little bit of a market downturn. Now, it is my belief that we will see a Santa rally, so I may not be so quick to sell calls against my leaps. I will likely wait until January. And the cool thing about leaps is you can also roll them like all options. So if come January, February, the stock isn't moving like I want it to, I can then roll it to July or August and then start selling calls against my leaps. Now, what if I don't have enough money to buy a leap? Well, there are options plays for really every budget, but it's important to be realistic and know that you are not going to mimic the same gains as someone who can afford a leap, for instance, right? So you can trade a call vertical spread if you are bullish on NVIDIA. That means you can go out to June and you can say you can buy the 150 and sell the 155. And you could do this for $2.13 or $213, much cheaper than buying the 115 leap for $3,800, right? This will cost you $200. Now your gains will be capped, but you can still engage in a bullish play on NVIDIA for the long term with your budget, within your budget. So just a real quick breakdown of how this works. You're buying the 150 call and you're selling the 155, and you're doing so for a debit of 213, right? So you're doing this for a debit of 213. What that means, this is a $5 wide spread, as you can see here, 150, 155, right? The max that it can be worth is $5. Why? Because you can exercise your 150 call, and if you're assigned the 155, then you would give up those 150 shares at 155. So the max that this spread can be worth is $5. You paid $2.13 for it. That means your max profit, if NVIDIA is above 155 by June, is $2.87 or $287 for every spread that you sell. So you'd pay $213 for it, you'd make $287 for it if NVIDIA is above 155 at expiration. To calculate your break even, it would just be the lower number plus what you paid for the spread. So if NVIDIA is 152.13 at expiration, then you make or lose $0. If it's above this, then you make some profit. It has to be above 155 at expiration for you to make the full profit. Now, if NVIDIA between now and June starts climbing, and let's say it's 160 in December or January, then yes, this spread is going to be worth a ton, almost at max profit, not quite, but almost. And then you could just sell it before June. You don't have to hold it until June. So you pay $213 for it, and let's say now it's worth $4.50, then you could sell it for that profit. If the price of NVIDIA goes down and this spread goes down, you can also mitigate your losses. You don't have to waste your entire $213 if you decide that you don't want to hold this anymore. Now, in terms of NVIDIA, if we get below this, which is 132, then that to me would be new market structure, especially if you close below this. And my thesis might change on NVIDIA in the short term. So that would be my exit strategy. So hopefully that makes sense. My price target on NVIDIA, 165 in 2025. If you want to learn how to trade options for Black Friday, I am going to be discounting the options course. It is a full options course from A to Z, beginner friendly. I'm going to be discounting it. You can find it in the link description below. If you want to join the trading group, go live with me every single day, and you want to get all of my buys, options, futures, day trades, stocks, etc., that link is also in the description below. If you're only interested in investing and not trading, and you just want my long-term analysis, that is a discounted membership at $35 a month as of the time of this recording. That is also in the description below. So options for everybody. Subscribe to the channel, hit that notification bell. Let me know what your price target is for NVIDIA for 2025. Let me know if you agree with me, disagree with me. Am I being too conservative? Is your price target for NVIDIA a lot higher? Let me know. Would love to hear from you. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.